Hey guys, this is John Hunter again with the tip of the week. This week I wanted to talk a little bit about credit and how to maybe hack it and understand a little bit of how lenders use it and how it works to be able to maximize it and take a little bit of the guesswork out of it. Credit scores typically will run anywhere from 300 to 850. That's the scale. I like to say, if you breathe air, you can most of the time take 50 points off the top. So a lot of people say they have 800 credit scores. It's not that common that we see them. Most people with excellent credit are in the high 700s, but and to get anything lower than say a 500 is pretty rare as well. You really have to do a lot of stuff. You got to try hard to get it that low. So it happens, but it's not that common. So really, the range you're looking at is anything 580 and above is considered poor. 580 to I'd say 579 is considered fair. 580 to 739 is considered good, and 740 to 799 is very good, and anything above that, 800 plus is 800, and it's just like I said, it's pretty rare. People get there, but it's a real mix of age of account and whatnot. So really, what they're looking for when they go into credit scores is history, of course, paying on time, right? That's huge. You got to start there. So paying on time, but it's also the age of accounts. How old are they? The older they are, the more history there is, the better, the more stability. They're looking for stability. Really, credit scores are nothing but a way to put a formula to risk. And so that's what they're doing. So age, of course, is huge. Payment history, also the mix of accounts. They like to see a revolving account like a credit card, and they like to see installment like a auto loan, student loan, something along those lines. So age of account matters. Too much of anything is not necessarily good. So if you have 30 credit cards, your score is going to be lower because that's a higher risk. So now a big part of it goes into it. And honestly, I see this affect people's scores actually just as much as being late, believe it or not, is utilization. And what utilization is in a nutshell is how much do you owe versus how much you have available. So you have to remember the credit report cannot tell how much money you make. They have no clue. So if you have a credit card that is $1,000 limit and you owe $800, you're 80% utilized. But if you have a $10,000 limit and you owe $2,000, you're only 20% utilized. So it's not about how much you owe, it's how much you owe in relationship to what is available that matters. So keeping that utilization down to 30, I'd say like to say 30. Some people say 40, but 30% or so around there or lower of what's available, then you never really have to worry about utilization whacking your scores. But I've seen him literally knock 100 points off of somebody's score and going to get a mortgage. That can really add up, and fees and rate and whatnot. And really, that's what I'm here for, is really to make sure that anything you apply for, whether it be auto loans or mortgages, of course, what I do, but insurance, anything you can think of, credit scores play a huge role in it. And the credit bureaus are pretty sneaky with it too. They have a different scoring model for just about anything you do. So, like when you go on Credit Karma, you're going to get a general scoring model, typically Vantage 8, right? That scoring model really kind of doesn't apply to much. So, when you come to me and get a mortgage, you'll I'll pull a credit score and it'll be different than what, say, Credit Karma or CreditWise or NerdWallet or any of those monitoring services will use, because they're using a general scoring model, not specific for mortgages. So it's kind of interesting, but that matters. So another aspect that goes into credit scores is inquiries. So how often you're credit checked. Now, a lot of people know that can hurt your credit scores, but do you know why? Back to the whole risk analysis. So people that have their credit checked or are applying for credit often and sometimes getting denied, sometimes not, but they're applying often, uh, default at a higher risk or higher rate than people that don't. So if you're not asking or applying for credit very often, it really, you're not a risk factor. But if you're applying every time you go shopping at Kohl's or wherever to get 10% off, and you've got 30 credit cards, you're a higher risk than somebody who is a more conservative credit user. So that's why credit inquiries hurt. So one or two inquiries don't hurt. That's not it. It's sustained inquiries over a long period of time. Rarely do I ever see inquiries affect somebody's score in any dramatic way. It's only when people are getting their credit checked a lot. So a lot of times what I'll get is people not want their credit checked because they're afraid it's going to lower their credit score. First of all, most of the time when I have that objection, it's those are people with the best credit. So, but it's rare that it ever is an issue. So, but so you can rest assured, and especially when applying for a mortgage, one thing to remember is any inquiry with a lender in a 30-day period, if you have multiple lenders, it all actually only counts as one inquiry. And they do that to keep people from, from being told not to shop. They want clients to be well informed. They want you to have options. They want to make sure that you're getting the most competitive offer out there. So having your credit checked more than once, as long as it's within a short window, 30 days typically, then it's only one inquiry. So that's one good thing to know when you're out there shopping and you're trying to get the best possible deal. But multiple inquiries, like I said, that can hurt, but it's not. It's pretty rare. It rarely gets in the way of actually making a deal happen or not. I don't think I, in 29 years, ever remember one transaction where I said, "Well, I wish you hadn't applied for that Home Depot card." I don't think that's ever been the case. So usually there's a whole bunch of other issues that are going on there that have nothing to do with inquiries. So, but that said, there are ways to quickly improve your credit. There are some programs out there where you can add your utilities to your credit. Um, uh, that'll help bump your score a little bit. I've seen that help a little bit, short-term stuff. But for the most part, it's utilization, it's credit usage, it's account mix. Having no credit is almost as bad as having bad credit sometimes. But using it a little bit sparingly. One thing I did notice, and a lot of people don't realize this, is that the credit bureaus are not an ongoing thing. They get reported to once a month. So there's literally one day a month, say Capital One, right, will report, they'll do a data dump and they'll dump a whole bunch of account information all on one day. Say it's the 15th of the month, right? Well, if your statement comes out on the 17th of the month and they're doing their data dump on the 15th and you pay off your bill in full every month as soon as you get your statement, right? But yet, let's say you're using your for travel, whatnot, for work. And this is something common. People want the miles, right? Who doesn't? So you'll rack up the credit card, but then you'll pay it off at the end of the month. So in your mind, you don't carry a balance. You are paying it off every single month. But because it's being reported right before your statement comes out, when they do their data dump, it looks like you're carrying a balance month over month, sometimes even close to your limit. I had a relative come to me once. They applied for a mortgage and very proud of their credit and worked very hard and protected it their whole life. And, and she does have good credit. But the problem was her scores were lower than what she anticipated because her card that she used for travel for work, that she was being reimbursed and paid off every single month, showed that she was close to her limit. And then it whacked her credit scores close to 100 points. And that got in the way of her getting the best possible deal that she really deserved. So paying attention to that date of when they report can be important if you're paying stuff off every month. So what I've done to protect my own is I pay off my credit cards as much as I can every month. And so when I do, I'll make multiple payments during the month. So I pay attention to that date. I know that come the 13th of the month, the credit card that I use the most reports, 12th or 13th, depending on the weekend. So I try to make sure that my balance is as low as possible come that day, even though that's not my statement cutoff date. It never is. So that can be a little tricky. So there's a little bit of a tip that I hopefully can be helpful if you're paying stuff off every month. But it really isn't rocket science. If you just use it sparingly, be responsible. The older it gets, the longer the history you have, it's just gonna help. So one little trick too is if you're younger and you're trying to establish credit or even reestablish credit, authorized user accounts. They don't work as good as they used to, but it does work pretty wonders. Where you can become an authorized user on somebody's account, where you can charge on the account, although you don't even have to, right? You don't have to get a card. You don't have to get access to it. But if they add you as an authorized user, very often that will give you enough credit history. Now, it doesn't work on its own, right? If there's no credit history, an authorized user isn't going to put you on the map immediately, right? But it's great for establishing, adding on to it. For example, when my son turned 18, he, very first time he checked his credit, he had this like 780 credit score because I had put him on a credit card and he had been on it since he was 16. And here it is, boom. As soon as he had any credit whatsoever, instead of having no scores because there's no history, he had this history that was almost as old as he was. So That was really helpful for him establishing credit. And my daughters, when they turn 18, they'll have that as well. But obviously, you want to make sure that when you add somebody that they're responsible, they're not going to, charge up a whole bunch and whatnot. There's got to be a certain level of trust there. But the authorized user method can really help establish credit quickly or reestablish quickly with little or no money out of pocket and little or no effort, right? It's a phone call. And you can remove somebody as an authorized user really quickly as well. Although, a little warning, if you add somebody and then remove them, typically you cannot add them back. So it's a one-time deal for a lot of those companies. So just so you know, but that is a good way to get established credit quickly, easily. There's obviously the secured credit card where you put a deposit down. Say you give Capital One $500 and they'll give you a line of credit for $500. So that's not a bad way, because then that $500 deposit you give them sits there and earns interest, usually in the form of a CD, certificate of deposit. And then at some point when your credit's established enough, you can cash that out and get the money back plus interest. And then you have this credit that has been established. That's a wonderful way to reestablish or even establish if you're young. Another way, and there's an account, and BECU I think is the only one that I'm aware of that has this, but you can sign an agreement with them where you will agree to put, say, $50 a month into a savings account, and you sign an installment agreement with them. This says it's like a forced savings, right? Where every month when you get paid, they'll take $50 out or 25 or whatever it is for a certain amount of time, say 3 years. And they'll take that amount out. I don't even think it has to be 3 years. It could be like 2 years or a year. But they'll take that amount out. And the crazy thing is they'll report it on the credit report like a car loan. It's an installment loan. Remember when I talked about the type of accounts is important. You want installment and revolving. Sometimes when I'll see credit scores, it'll tell me the scores are not higher because of lack of installment history. That is a great way. It doesn't require perfect. You don't have to have any credit. It's just an agreement that you make that agrees that you'll save $50, and that money, that $50, goes into a savings account. It's there for you to use. It's your money. It doesn't cost anything, and it can help you establish credit. So that's about it, guys. I think hopefully that's helpful. It's a little bit of tip, a little bit insight into credit. Obviously, there's the nuances to it. Stuff with public records on how long they stay on your credit, whether it be bankruptcies, tax returns, that type of thing. If you have any issues like that, any questions on how long it takes, what the waiting periods are, this is different. There's different rules. FHA is only 2 years out of bankruptcy, and conventional can be 4. But if there's a foreclosure involved, it could be 7. But not always. So anyway, if you have any questions like that or any scenarios you want to run past me, I'd be happy to help, whether it be with mortgage or anything else. I'm here as your trusted advisor and helping anything financing wise. I will always do my best. And if I don't know the answer, I'll point in the right direction. So hopefully you guys have a great week, and thanks for listening. Licensed in multiple states. John Hunter, guaranteed rate, 206-856-4685. Contact information is above. I'd love to hear from you. Any ideas on videos, any topics you want me to cover, I would be very open to any suggestions. So have a great week, and I'll talk to you soon. Bye-bye.